I didn't make $1 million trading Forex to impress you or to flex screenshots or to sell you a dream. I made $1 million trading Forex to prove one simple thing that most people are scared to accept. Forex is not luck. And if you still believe it is luck, that belief alone is the exact reason you are not profitable. Most traders don't fail because the market is hard. They fail because they never build a system that removes randomness from their decisions. They jump from strategy to strategy, indicator to indicator, signal to signal, hoping that the next trade will be the lucky one. And luck is the language of people who don't understand probability, structure, and risk. I want you to understand something very important from the start. Professional traders do not wake up and ask, "Will I win today?" They ask, "Did I execute my process correctly?" Money is a side effect of execution, not the goal. And the moment you chase money, you lose discipline. When I started Forex, I was exactly like most of you, emotional, impatient, overtrading, revenge trading, thinking more trades means more money. I blew accounts, not because I was stupid, but because I had no framework, no rules, and no respect for probability. And here is the truth nobody tells you. The market does not reward effort, it rewards consistency. You can work 16 hours a day and still lose money if your system has no edge. And you can trade 30 minutes a day and build wealth if your system is statistically sound. This is where the idea of luck completely dies. Luck only exists in a single trade. Professionals don't trade one trade. They trade a series of trades. And in a series, probability always wins, if you understand risk management. Most retail traders focus on entries, where to buy, where to sell. But institutions focus on exposure. How much can I lose if I'm wrong? Because survival is the first rule of trading. If you don't survive long enough, you never see compounding, and compounding is the only reason a small account can ever turn into a $1 million account. Let me make this very clear. You do not need a high win rate strategy to make money. You need a positive expectancy system. Expectancy is win rate multiplied by reward minus loss rate multiplied by risk. Most people lose not because they are wrong too often, but because when they are wrong, they lose too much, and when they are right, they take profits too early. Fear controls them, and fear comes from oversized positions. If you trade too big, every tick feels personal and emotional. Trading begins. That's why the first thing I fixed was risk, not strategy. I capped my risk per trade to a fixed percentage, no exceptions, even on A-plus setups, because one undisciplined trade can destroy months of consistency. And once risk is controlled, psychology becomes easier, discipline becomes natural, and execution becomes boring. Boring is good. Boring is repeatable. Boring is how professionals make money. Now, let's talk about the myth of market manipulation. People say banks hunt stop losses. Yes, liquidity exists. Yes, big players need liquidity, but they are not hunting you personally. They are executing large orders in areas where liquidity is naturally sitting, above highs, below lows, and at key levels. If you understand this, you stop being emotional and start aligning with structure instead of fighting it. That's why I removed most indicators from my charts. Indicators are lagging reactions to price. Professionals read price directly, structure, liquidity, and time, entries, not flashing signals. If your strategy cannot be explained without an indicator, it means you don't understand why it works. And if you don't understand why it works, you will abandon it during drawdowns. And drawdowns are unavoidable. Every profitable trader has losing streaks. The difference is professionals expect them and plan for them. Amateurs panic and change systems. That's why I built a rule-based execution model. Same market conditions, same time window, same confirmation, same risk, every single trade, no exceptions. This removes decision fatigue and emotions over time. Results become predictable, not because each trade is predictable, but because the process is consistent. This is how luck disappears from trading. Luck cannot survive inside rules, discipline, and probability. Now let's talk about scaling,
because this is where most traders fail, even after becoming profitable. They make money, then lose it all because they increase risk too fast. Confidence turns into arrogance, and the market humbles them. Scaling is boring and slow. You increase size only after a statistically significant sample size proves your edge holds. With discipline, you don't double accounts overnight. You compound gradually because the goal is longevity, not excitement. $1 million is not made in one trade. It is made in thousands of disciplined executions. Most people want excitement. I wanted freedom. And freedom comes from control. Control of risk, control of emotions, control of ego. I don't trade every day. I don't trade every setup. I trade only when my conditions align. And if nothing aligns, I do nothing. Inactivity is also a position, and one of the hardest skills to master. And finally, understand this. Forex is not for everyone, and that's okay. If you want fast money, gambling, adrenaline, or validation, this market will punish you. But if you are willing to treat trading as a business with rules, risk management, journaling, review, and patience, then it is one of the few skills on earth where location, age, and background do not matter. Only execution matters. I didn't make $1 million because I was lucky. I made it because I stopped chasing luck, built a system, respected probability, managed risk, and repeated the same boring process over and over again until the numbers did what numbers always do when discipline meets time. And if there is one thing you should take from this lesson, it is this. The market does not care about your hopes, fears, or opinions. It only responds to consistency. And those who master consistency never need luck again.